You recently sounded the alarm about startups and fundraising in Silicon Valley, saying Silicon Valley is taking on an excessive amount of risk.
Yeah.
Quote, unprecedented since 1999.
Yeah.
Why?
First of all, I think the cause of this risk-taking is an abundant amount of capital at the late-stage market. Lately, it's being pushed into startups. And the problem is, it's much easier to run a company that's losing money than one that's profitable. And so we have a lot of companies that have raised money at high valuations that everyone says, hey, these companies are going to make it. These are the breakout winners. And I'm not so sure, just because they haven't passed that test of proving that the business model has legs over the long term.
Which companies aren't you sure about?
There's certain sectors that I think are more prone to arbitrage. I think a lot of the ad tech companies. I think e-commerce is a dangerous one. And even in the SaaS model, the problem is no one really gives up. No one says, oh, our numbers aren't working, we should take it off the field. They just keep hoping it's going to get better, and they press it.
So what are you most worried about?
Bad actors in the ecosystem. So companies that maybe don't have long-term economic models, that are out there, perverting the rents that people pay, the cost that you pay for employees, the market that they may be in against a competitor where they might just try and spin to win.
Why is now not a bubble?
All I said was I think risks are too high. I never said valuations are too high. I don't see a lot of valuations, maybe GoPro might be a counterexample, but I look at, Facebook or Google, they're trading at really low PEs actually. I don't think we have a valuation bubble going on per se. My bigger concern has to do with the large burn rates.
If it's not a bubble and it doesn't pop, what happens? Is there a downswing?
Well, there's two things that could cause a correction. One would be some macroeconomic. It's very hard to predict macroeconomics. The second thing could be the firms that are doing the late stage investing might change their criteria a little bit. And I think that's probably the more likely near-term catalyst for something like this, where they start to ask questions about, do these companies really have a business model that can go the distance? We're more cautious. We're still making new investments, but we're more picky for sure.